What a day in the markets. The S&P 500 and NASDAQ hit record highs, and NVIDIA overtakes Apple and becomes the world's second largest company with a $3 trillion valuation. Tech stocks did very well today as a whole. CrowdStrike was up about 12% after putting up better than expected earnings and good guidance. Why was the market up this much? Well, there's renewed optimism about Federal Reserve rate cuts this year and earlier than expected, increasing the odds of maybe a September rate cut, and there's some chances of a July rate cut. The fact that that is happening and increased odds of that, that's mostly due to a slowing economy. We had weaker than expected ISM manufacturing numbers and JOLTS job opening numbers, which is ultimately what the Federal Reserve wants to see in its battle to slow down the economy and inflation. And since they saw that, there's increased chances of rate cuts coming, and that means more liquidity. And tech stocks in the market as well likes liquidity. Bitcoin even hit a level of 71,000. And another reason why there's more liquidity coming into the markets is that the Bank of Canada cut their key interest rate by 25 basis points. And then on Thursday, tomorrow, we have the ECB having a meeting, and they'll most likely cut their interest rate. So there's starting to be a rise in global liquidity as a result of that. And the stock market, especially tech stocks as well as Bitcoin, is trying to price that in ahead of time, because the stock market, especially tech stocks and crypto, like specifically Bitcoin, tries to price in an increased amount of monetary liquidity or amount of money flowing in the system, or helicopter money, about 3 to 6 months ahead of time. So the fact that these central banks are really starting to cut rates, that means the U.S. will likely do the same soon, hopefully maybe even in July now, but hopefully definitely by September. So either way, this is good news. And NVIDIA is huge because NVIDIA is providing these AI GPU chips to power the fourth industrial revolution. And I think this is the pretty much the end of the first year of a 3 to 5 year bull market that'll most likely end in a bubble, and there'll be a pretty substantial price drawdown from that bubble. But I still think we have 3 to 5 years left of pretty strong gains in this market.